Folks, good morning and welcome to Stock Charts Today. It is FOMC meeting day. There will be a press conference. There will be volatility. So, as I mentioned to members last night on Market Wrap, during our strategy session, buckle up for the volatility that's set to follow. Not much news this morning on Zero Hedge. I found this article interesting. Study reveals 95% of financial professionals can't beat the market. No shock. I had to smile. No shock. Half of those investment professionals subscribe to Standard & Poor's or another off-the-shelf portfolio recommendation service. And if they can't afford to have an in-house research staff, they probably have an investment banking side as well. So the inherent conflict of interest prevents the advisory side from doing the right thing for their clients in favor of the investment banking community. So there's an inherent conflict of interest. The remaining 5%, I'll throw myself in that 5%, except I am not a fiduciary. And the remaining 5% that are beating the market, in all probability, you probably need to be a high net worth professional. That's not to say there aren't a few out there that are good financial professionals available to most, but you will pay. Let's get to the charts of the pre-market activity, and then we'll segue into member stock chart request, which is where we review the symbols that our members submitted for me to review. And it being Wednesday, midweek, hump day, let's take a look at a few of the stocks that I went over last weekend and how they're performing as best stock charts so far this week. As is usual, these are all 4-hour charts. We have the S&P 500 this morning. That is up 3 points. The 4-hour chart is showing that we have a head and shoulders setup, left shoulder, head, right shoulder. Here's our neckline, which is broken. Now we are trying to establish a base. And to me, all this looks like is a dead cat bounce off of an oversold condition off the lower band of the third standard deviation Bollinger Band. Right here, we saw a bullish reversal, and we really haven't been able to capitalize on that reversal bar. Now, today being FOMC day, I can assure you that the investment banks are pricing in a fourth interest rate hike if they, meaning the Federal Reserve, do not raise the upper band of their target range from 1.5 to 1.75. Then you should see a rally in this market, a relief rally. I went over in great detail with members last night and over the weekend. I sound like a broken record at this point, the reasons why the Federal Reserve should stand pat where they are right now. I wouldn't be the least bit surprised if they didn't raise rates given the economic data that's unfolding. But the investment banks have priced in a fourth rate hike. I don't think we're ever going to get there for multiple reasons. But what do I know? I'm just a small guy from Long Island. So in closing on the S&P 500, watch for a short-term break as we are, in fact, putting in lower highs and lower lows. Never, ever good when you're long. The NASDAQ, same deal here. A dead cat bounce off of an oversold condition. We are in an ascending flag formation, which is not my favorite setup here. I would prefer a descending bull flag formation. In all probability, we are going to break here today. That doesn't mean we can't recover after the Federal Reserve announcement, but this is a weak setup. And the futures are down about 22 points on the morning. It's still very early. It's only 4:47 in the a.m. here, Eastern Standard Time. Let's take a look at the dollar, which had a very, very strong move yesterday. Why? I have no idea. There was no news. I have been quite bearish on the dollar, but overnight, it gave up a lot of yesterday's gains. Now, I'm not going to update my annotations here. I'm pretty much going to stay firm with the U.S. dollar. If the Federal Reserve amends its statement in light of the weak economic data, namely the yield curve, which it may not name outright as being a threat, but it certainly is. They just may want to ignore it, and they don't want you to pay attention to it. Which the yield curve, for people that are not familiar, which is very close to being flat, has been a signal of recession for the past 6 recessions. And guess who missed the past 6 recessions? The Federal Reserve. They were in denial. So we'll see how Jay Powell does. Hopefully I'm not giving him too much credit for identifying the weakness in the economy. So we're looking for a break on the US dollar below 89.3. If we close down below that level, it's all over for the dollar. We're going down a lot lower, and you had better be long of the commodity names. And let's take a look at gold and how it's performing today. Gold rallied overnight, as you might expect, with the performance of the US dollar. We're up $6.20 right now, just shy of a half percentage point. Nice price move here. So gold is looking good. It had a horrible day yesterday. Although it has been, in defense of gold, it has been holding support. Let's leave off with Bitcoin. Bitcoin has rallied strong off of last Thursday's lows. We managed to break above resistance here. There's a headline out from Peter Thiel about Bitcoin. He's predicting that they'll be the winner in the cryptocurrency arena. And that's a headline. I have to read the article a bit further because the headlines are often clickbait. So I wouldn't want to quote Peter Thiel off of a headline. But if he's talking bullish about Bitcoin, he's one of the guys I respect. He's one of the original guys that saw the potential in Facebook. So you can see that Bitcoin has recaptured prior support. It's down in the current period. However, it is inching up higher. If we do begin to rally further, price target 9,500 on Bitcoin. So about approximately $600 to the upside potential here. Let's get to member stock chart request and a revisit of last week's best stock charts that are holding up fairly well. Let's get to it. Costco, daily chart. A bullish reversal day yesterday and a breakout above resistance. A close above 188 would be a very interesting level for us to open up a position at. We have a cup with handle formation on RSI. We're breaking out above the upper band of resistance. Volume yesterday was rather weak. What I want to do, folks, is I'm going to wait. I'm not looking to short, nor am I looking to buy until after the Federal Reserve meeting. So we'll see how Costco and the overall market holds up in light of the announcement. Then we'll look to pull the trigger. Short term, Costco's looking good. Weekly chart, bullish key reversal on the week. The week isn't over yet. But if we close as we are right now, Costco may just be worthy of being added to our portfolio. Next chart up, Domino's Pizza. Weekly chart will remain in a consolidation here. The longer the consolidation, the greater the validation of any breakout. So I'm liking the setup here on a weekly basis. Stokes are rising, RSI is rising. Volume this week is fairly light. Let's go to a daily chart. We did press higher yesterday. We did put in a new closing high, but we closed off the highs of the day. I don't like topping tails on top of these candlesticks. It implies that we have sellers above, buyers back here, selling into strength. And there's not a lot of buyers back here. Let's face it. So I think that if the market begins to rally, the S&P 500 as a whole, Domino's Pizza should join in. We don't have much resistance above. Stokes are rising on a daily basis. Same deal here, RSI. I like the chart. Volume could be better to the upside. Ultimate oscillator is diverging. It is making lower highs and lower lows despite the fact we're inching up on price. So a bit of a concern, but nothing that should rule out the shares if they begin to break out. Valero, we only need to look at a weekly chart here. We are very close to a breakout point. We were above it earlier in the week. We have since given up those gains. This is why we do not make trade decisions on a weekly chart until Thursday or Friday when we either A, firmly above the resistance level where we're confident that we should close above it, rather than buying early in the week on a Monday or Tuesday while we're above this level with a few trading days left to go in the week and run the risk of closing back down below support. You can either A, hold on to it and risk being taken out when on a break below support, or B, if you stop out prematurely because we close back down below resistance. There's no sense in doing that. You're churning your own account. Don't do it. Wait for a weekly close above resistance if you're using a weekly chart to guide your investment decisions. So we'll wait here. Sonesta Technologies weekly chart. We broke out the week of March the 5th. We pulled back last week to retest the breakout point on the week of the 12th. This week we're pulling back yet again, retesting, and we're holding. I like the setup. I'm even more bullish today than I was over the weekend. Volume this week is extremely light. Exactly what you want to see. Declining down volume on a retest of a breakout point. This is a series of traders retesting the breakout point. They're OCD. They want to touch what was prior resistance, should be now support. Pardon my English. But that's what they're doing. They're retesting a breakout point. The longer it holds, the greater the probability of them opening up a position, assuming that the markets begin to rally. MDU, weekly breakout thus far this week. We watched the breakout last week. We do have a breakout on RSI. It's hard to see here. And we are pulling back and retesting support. Now, on price, we are off the highs of the week. Not necessarily what you want to see, because we're seeing profit takers. What we'll want to see are the shares close above this resistance level on Friday. Volume this week is fairly light to the upside daily chart. All right, so here's our breakout on the 15th. We've had 3 consecutive days subsequent to the breakout closing above the upper band of resistance. That's really bullish stuff. Yesterday was a down day. We closed off the highs of the day, but we also closed off the lows. So we'll give it a pass. Volume was very light yesterday. I don't like the MACD now trending downward. So that's a bit of a concern. But net, the shares are looking good. Would I go buying them right now? Not quite yet. Soon. Assuming that they earn the right to be added to our portfolio by being able to consolidate here above support. And if the market does rally on good news out of the Federal Reserve, well then, we'll be looking to add MDU resources to our portfolio. Las Vegas Sands, weekly chart. Much like we're seeing with Sonesta, we are seeing with Las Vegas Sands. We're getting a pullback and a retest of support. That's good stuff. Stokes are rising. RSI, we have a double bottom setup, and it's beginning to hook up. The week isn't over yet. Darden's Restaurant, a very good-looking consolidation here within this triangle formation. RSI is hooking up. Stokes are weakening. But you can attribute that weakness to this consolidation skewing the performance of the Stokes. Daily chart, we rallied yesterday, closed off the highs of the day. This remains a watch. We're beginning to break out on daily Stokes. We have broken out on daily RSI. We've pulled back, retested. We're rising here. Interesting setup. Members, more to come on Darden. Power Shares Water Resources. A similar week to last week, whereas we are trading off the lows of the week. We're very close to pulling the trigger on this position as a long-term investment. So members, stay tuned for an alert. And all these chart folks, if you're not currently a member, if we buy the shares or look to short, if we're looking to short the shares, we will send out alerts to our members. Shopify weekly setup. We have a bullish engulfing of the prior week's move, a new weekly high. Good stuff here. A very strong stock. Daily chart. We had broken down below the lower band of support, but yesterday we reversed to close above resistance, putting in new all-time highs. Higher lows and higher highs on Stokes. A beautiful double bottom setup here on RSI. Volume yesterday, outstanding. If there's one thing that concerns me is the fact that we closed off the highs of the day. And when I see that in the market that is so fragile right now, I give pause. I think about a tactical way to approach a trade entry, and that tactical approach would be to see how the markets and the shares perform after the Federal Reserve announcement. So no action this morning. To our short watch candidates, the SPXS, which puts you short of the S&P 500. I'll tell you, Stokes are looking good on a weekly basis, as is the RSI. We are up on the week, but we have yet to break out. So this is going to remain a watch. And I will most certainly not be opening a position in the SPXS until after the Federal Reserve announcement. I am of the mind that they will be more dovish for several reasons. One being the weakness in the overall economy. Two being the midterm elections. Because if they come out hawkish, this market, which is already buckled with rates on a 10-year yield with a 2-handle, will see a 3-handle on yields in a heartbeat. And you're going to see this market begin to really deteriorate and deteriorate fast. I don't think anybody wants to take ownership of this market, with the exception of the liberals who want to regain Congress in advance of the midterm elections. Do not underestimate these thugs in Washington who want to retain power. I don't care which party they belong to. ERX, fellow member Brian yesterday mentioned in the forum that ERX was behaving well, and he's right. We recaptured support yesterday after breaking down on the 16th. The only caveat here is that we closed off the highs of the day. I like the setup here. Oil rallied yesterday. ERX should have done better, so it remains a watch. Volume was light yesterday. We'll see how the ETF performs after the Federal Reserve meeting. We will do nothing until we have visibility. And that's it for this morning, folks. If you have any questions, members, leave them in the forum. If you have a question, other members do too. If you're watching this on YouTube, please subscribe to my channel. Leave a comment below. Hit that bell button so you get notified of future videos. If you found this video through StockTwits or Twitter, please follow me there. And if you watch this on the website, enter your email address. We hate spam too, and you'll get a few free trading lessons. Everybody have a profitable trading day. Members, obviously, we will be doing a big market wrap tonight. We'll revise and discuss our strategy. Have a profitable trading day. Be well.